right on and put the spotlight on VRO Hospitality. It's a homegrown fine dining chain that's raised about $10 million in bridge funding with a mix of equity and debt, led by Axis Bank as well as Nikhil Kamath-backed Gruhas. Joining in right now on the show is Safdhar Adoor. He's the co-founder and director of the company. Good to have you on board, Safdhar. To begin with, tell us who the lead investors were that participated in this round.
So we just did a bridge round right now. So it was led by Gruhas, which is founded by Nikhil Kamath, and Axis Bank as well. So these were our two lead investors. We had a couple of notable investors along the way as well. So Kunal Shah participated in this particular round. Mithane Sampath participated in this particular round. Taxi for Sure founder Apramaya participated in this round. Couple of names like that, but mainly backed by Nikhil Kamath's Gruhas as well as Axis Bank.
So $10 million fundraise, how are you looking to really expand the brand and really accelerate your product development with these funds?
Okay, so see, we have close to 48 restaurants right now, 47 actually to be precise, 47 restaurants right now. And we have close to 12 new restaurants opening, 12 to 13. The 13 just got finalized, 12 to 13 new outlets opening in the next 3 to 4 months. So this would basically put us in a revenue run rate of close to 1.5x of where it is today. And this would be in the next 6 months because all our projects are nearly 80-90% completed. So the latest bridge round which we have done is basically to infuse capital to finish these projects as well as strengthen our entire infrastructure. Because we have invested a lot of money internally to build a lot of technology and product and everything for our own acceleration of business. So to strengthen our entire infrastructure as well as complete these last couple of projects which we have in the pipeline is why we've raised some bridge round right now.
Let's talk financials. You closed last year at about 170 crore rupees. Are you on track to scale that up further, and are you cash flow and EBITDA positive?
Yeah, so this, like how we have done 170 crores last year, this year we will be close. We will be doing this financial year. We'll be doing close to 280 crores. That's close to about 100 plus crores compared more than what we have done last year. So that is a revenue run rate what we are looking at this year. And we're looking at a revenue run rate of 400 crores by next year, for next financial year. So that is our roadmap for the next 3 months in this year as well as the next one financial year next year. So that is 280 crores and 400 crores is what we're looking at for the next 1.5 years. So that is our revenue run rate approximately what we are doing right now. We are EBITDA positive. We are not cash flow positive because currently we cannot be cash flow positive till we open up all our new outlets because a lot of funds are going in the pre-opening of the new outlets right now currently, our cash flow. So we are EBITDA positive but not cash flow positive. But we will be cash flow positive hopefully by April this year.
Sure. So how much have you raised up until now in equities, and have you leveraged your debt?
See, we have raised close to 4 million in equity till now. We have raised close to 4 million in equity and probably another 4-5 million in debt. So we've raised close to 4 million equity and about 4 million in debt. And our complete money, what we have raised till today, has always been around expansion and not around infrastructure. Because see, if you've seen our growth as well, in 2020 we were 5 restaurants, and currently now in 2024 January we are close to 48 restaurants. So we have grown close to 41 restaurants in the last 2.5 years. So technically all the money which we have infused, which we have earned from profits, which we have raised, we have hardly raised any money for the scale what we are in right now. We have infused all of it into capital infusion only for growth.
What about online ordering as a segment? Do you think that could perhaps eat into market share? Is that a bit of a worry?
Online delivery market is an entirely different business altogether. It's an entirely different market segment altogether. Dining in does not get affected much if you're in the segment what we are in. Dining in from an online eats into each other's business when it's a QSR business, not when it's a fine dining alcobev restaurant like us. So it usually, like I said, it usually eats into a business where it's a hybrid QSR model. For example, like a chai point. Like a chai point has a uh, good distinguishing between an online and an offline sale, where like your delivery business is a very large business. For us, our delivery business is not a very large business. It's less than 7-8% of our overall business, which is our delivery business. Because ours is more an experiential, alcohol driven eating joint and not like a hardcore QSR joint. So online ordering and delivery is not a threat or a big revenue channel line for us.
And there are a lot of well-established players within this F&B space. You have a lot of new, restaurants popping up now and then. Are you worried about competition? How do you plan to take it on?
See, competition is always going to be competition is the rule of the land, right? So, competition was always there 50 years ago. It's always going to be there in the next 50 years as well. So, competition is how you basically look at it and how you basically address it. Now, competition is something which we learn from, and we are very strong believers of innovate or become extinct. You need to keep evolving at time or you'll become extinct. It's as simple as that. And F&B is also the same way. So we need to keep evolving ourselves. So we keep evolving ourselves with concepts, with renovation, with experiences, with the kind of events and entertainment we give at each of our restaurants. So these are some of our distinguishers. See, we've had an earlier business as well. So we've had an events business called Steppin' Out, which got acquired by Times of India in 2020 and by Swiggy in 2022. So our prime background are events. So we've been masters of events, curation and entertainment curation, and we scaled our events business to one of the largest in India before it got acquired. So events and entertainment has always been a large USP of all our restaurants, which keeps changing, which does not become too monotonous. That definitely distinguishes us from our competitors as well. With how we do it and how we use the space. Space utilization is the most important in our business. Creativity, and that is what we specialize in.
Right. And Safdhar, what is the average size of the restaurants? How much do you make per restaurant?
Okay, so see, we follow a pyramid format in VRO. Like every city is like a pyramid. Now I have the top of the pyramid, which is basically one unit and one restaurant, which can be like one in a city, which I have like a Mirage. And my bottom half of the pyramid is the strip where I can have multiple restaurants in the same city, which can go hyper local. Now I have brands catering every single level in a pyramid. Like my top of my pyramid will be my brand called Mirage, and my bottom half of the pyramid is my brands called Plan B and Cafe Noah. So based on this pyramid is how we basically expand per city. Now what I mean by that is like a Cafe Noah and a Plan B in a city can be close to like 10 in a city. Like we have 12 Cafe Noahs in Bangalore, we have 12 Plan Bs in Bangalore, we have 11 Cafe Noahs in Bangalore, but we have just like one Mirage in Bangalore. So based on this pyramid structure is how we basically expand all our cities as well. Bangalore has been a model city. We have close to 33 restaurants in Bangalore, hyper-local across the city as well. And now we are replicating each city like a Bangalore. Now our second city, which we are expanding aggressively, even though we have foothold in 7 cities across the country, our major foothold is going to be like concentration of cities, like how Bangalore is. Our second city is going to be Bombay. So in Bombay, we are already having 5 restaurants. We have a Badmaash, we have a Cafe Noah, Taki, Los Cabos, and a Badmaash Andheri. We have 5 restaurants now in Bombay. And the 6th one is opening now in Bombay very soon, by next month. So Bombay is our second model city after Bangalore.
And finally, how are you looking at your expansion plan? Will it be in North India as well, or will Bangalore be the primary market?
Okay, so we have 2 long-term plans. One, of course, is our country capitalization itself, because our country supply to demand ratio is very high. There's a lot of demand. Naturally, there's a lot of supply as well. And a few of our products, we're going to take it international. Like Badmaash is our Indian concept, like our Indian lounge, Bollywood lounge, Indian restaurant concept, which is something which we're going to take it international as well. So next year we have plans of we are in advanced talks with Dubai and London for our brand Badmaash. So one of our brand which we are aggressively thinking international right now is Badmaash, which is basically our strength as well, which is Indian food.
All right, appreciate your time. Thanks so much for joining in.